Good morning, ladies and gentlemen. Welcome to the show. We got a good show today, and let's get started, and let's open up the charts and take a look at what's going on. First thing we're going to take a look at is the silver price today. It's $14.58, and it's a little bit on the high side of the range. The new range it's established around $14.55. So we're up 5 cents on the day, which is good. Let's take a look at gold. Gold, we're looking at it up a buck, $1,285.60 right now. And it's the same way. It's a little bit on the high side. You know, there's been no real breakout yet for gold or silver, and the price is suppressed down really low right now. So I would call it an accumulation phase. Let's take a look at Bitcoin today. You know, I haven't refreshed the chart in probably 20 or 30 minutes, and so when I refresh the chart right now, it'll give us a good idea which direction it's moving. It's up 10% on the day, over 10% on the day, 87.66. Now let me refresh the chart. 87.62 dollars and 43 cents for Bitcoin. Let's take a look at the Bitcoin market capitalizations, and we're looking at $271 billion and a Bitcoin dominance of 57.4%. Now, you know what? That Bitcoin dominance is rather high. When we really start to see this market take off, I'm expecting that Bitcoin dominance to slide back down to probably 52, 53%. And the altcoins are going to start to do a little bit better. The rally has to get more underway and before the altcoins really start to take off good. But we notice Litecoin at $114.39, Bitcoin Cash $436, XRP is 41 cents. So XRP has actually made it above that 40-cent line. I look at that 40-cent line. That's what I look at on XRP. Now we're going to take a look at Ethereum, $268. And so that's what our coins are doing today. They're all up, and they're all moving quite nicely upwards. So we've had a really good rally now in cryptocurrencies. Let's take a look at the Dow for today. I'm going to have to refresh the page. Looks like she's up 95 points on the day so far. 25,558. Now I'm going to talk about the Dow in just a minute. And how it relates to these trade wars that's going on. Let's move on now to crude oil, and we see crude oil is up 69 cents on the day, or 1.19%. You know, if anything happens between the United States and Iran and the Gulf of Hormuz, we're going to see crude oil prices double. And it could actually triple in price, depending on how hot the situation is and how hard it is for tankers to actually get through that tiny little strait. You know what? We've got, quite literally, Iran has got these little tiny gunboats, you know. They're little tiny, they're little little speedboats, you know. They got 30, 40,000 of them. And each one of these boats is equipped with probably 5, 6, maybe 10 Iranians, you know. And then we got all them speeding around in the Gulf of Hormuz. And at the same time, we've got tremendous U.S. force piling into this small little region, you know. So there's an awful lot of confusion going on. Anything could happen there. Anything could happen. I mean, it's just like a powder, what they used in the old days, they used to call a powder keg. And that would really affect crude oil prices. Let's take a look now at U.S. Treasuries. You see U.S. Treasury yields rising today, but the overall theme over the past while has been falling Treasury yields. And that's them coming in and buying up U.S. Treasuries as a safe haven asset. The dollar, for an awful lot of people in the world right now, they see the dollar as the only game in town, you know. And because the dollar is actually the best fiat currency amongst a basket of fiat currencies. They're all garbage. Fiat currencies have always been garbage, and they always will be garbage. Eventually, they're going to disappear entirely from the face of the earth. And what's going to take them out is the new form of money which is cryptographic money, which is, too, just like fiat, it's not backed by anything. Doesn't need to be backed by anything. What it's actually backed by is the computer technology. So, doesn't need to be backed by government or anything. Let's take a look now at the U.S. dollar index. 97.78, and we see the dollar spiking upwards right at this minute. But it's probably not going to go too much higher than the 98s, because it's been riding in this range, like between 96 and 98, and it moves up and down within this range, but it hasn't been going too much of anywhere really over the past few months. Now let's take a look at earthquakes, and we're going to focus in here on the United States. Let me come in a little bit closer. And this is the area of crucial interest to us. There was an earthquake in the jungle. They had an earthquake in the jungle like yesterday. It was 8 magnitude. Now, that is one hell of a powerful quake. But it happened where hardly anybody lives, out in the middle of the jungle, I guess it shook the hell out of the jungle. But, can you imagine if a quake like that occurred someplace in the United States, the damage it would cause? Oh my gosh, that would be the big one. And of course, we all know that out in the western part of the United States, out in California, they're probably going to have a big one. But we can see overnight all these little shakes, None of these are big. They're all small little ones, magnitude 1 point something or magnitude 2 point something. Now, they did have a little bit of a shaker up in Alaska this morning that was a magnitude 5.8 in Homer, Alaska. That's getting up. That's getting up where you can really feel it, 5.8. Each time you jump a magnitude, the earthquake is 10 times larger. So if you jump from a 5 to a 6 magnitude, the earthquake is 10 times more powerful. So from a 6 to a 7 is 10 times more powerful than a 6, and an 8 is 10 times more powerful than a 7. So a lot of people, they don't realize that, the way the magnitude works on earthquakes. Let's take a look now at the plagues and stuff, and outbreaks, And we see pretty clean here all through the United States. The East Coast over here is absolutely nothing today. No diseases except for the normal things like cancer, and stuff like that. They're very bad, horrible diseases, cancer is and everything, but there's no contagious outbreaks of anything that you need to worry too much about in the United States right now. There's hantavirus case in New Mexico, but these are more or less isolated cases because hantavirus comes from rodents, and it's dangerous, but this is why you need to be careful if you're cleaning up dead rodents in your house or anything. You need to wear gloves and a mask, because they do carry hantavirus, and occasionally there's an isolated case. We got a case of meningitis down in Texas. A student has bacterial meningitis, but for the most part, the United States is clean. If we head over here to Africa, they have an outbreak happening in the Congo of Ebola, but its cases is up around 1,800 right now. People have it in the Congo, and it's mostly isolated to the Congo. The United States is clean of disease right now. We're pretty much clean of contagious diseases. Now, let's take a look at what's going on in the world here with the bonds and everything in the markets. I'm going to tell you what. The trade war that's ongoing between the United States and China right now, the market hasn't really come to the realization yet of the full impact of what these trade wars could actually have. They're still in this Goldilocks mood, thinking that the markets are going to go up and everything, and they know the Fed's got their back and everything, and they feel very confident. But this trade war is going to have effects, and the effects have not been actually realized yet. We're going to read a little bit from here at Zero Hedge here. It says, we expect this dynamic of pressure risk assets and U.S. bond yields lower They're expecting the bond yields to go lower. If risk markets don't drive cooperation soon, escalation will likely cause enough economic erosion to move the markets before long. And they're not talking about moving the markets to the upside. This economic erosion caused by these trade wars has not actually been realized in the markets as of yet. It says here, a 3 to 4 month extension of current tariffs could dampen growth in China and the United States by 20 basis points and 30 basis points respectively, barely avoiding recession. Well, you know, they're able to control these numbers, GDP numbers. They don't take inflationary pressures into consideration in the GDP numbers, and they're able to manipulate the GDP numbers slightly higher than what they really are. And this gives them an edge to say that we're not in a recession when we actually are in a recession. But, you know, this global debt-based Ponzi scheme they have running, they'll do anything. It's a generational Ponzi scheme, and they'll do anything to keep it running just a little bit longer. But all Ponzi schemes become top-heavy in the end, and they always collapse. And so, ultimately, this has to collapse. And just exactly how it collapses and how long from now is the big question mark. But, you know, these trade wars, if they continue, they're going to be continuing to push us closer and closer toward this next upcoming recession, which is really not that far out. But the trade wars are helping to ease us toward it much faster. This next global recession that we're heading toward really fast. We're going to take a quick peek at Deutsche Bank now to see what Deutsche Bank's doing on the day. And you know what? If we go back here, I think to the 5-day, we can see this morning or this afternoon, there's a little bit of a buyer right in here. Who Deutsche Bank was running at 6.38 euros, and all of a sudden the buyer come in and shot it up to 6.5 euros. As soon as they stopped buying, though, the price now is declining back down again. It's down to 6.42 euros. But what it's done is it's given Deutsche Bank a little shot in the arm. I think I know what these guys are thinking, buying into Deutsche Bank. They're in a state of disbelief that Deutsche Bank could ever actually go down and they could lose all of their money that they've put into Deutsche Bank stock. They're thinking somehow in their mind, hey, you know what? Deutsche Bank's going to somehow get a bailout or something. They're too big to fail, and I'm going to buy in while these stocks are low. This is what they're thinking, you know, or something. Something to that effect, you know. And so we're getting a few little nibbles as far as buyers are concerned of Deutsche Bank stock, because the price has moved down to an area where they think, hey, you know, it's really cheap right now. Let's get a little bit of this while it's cheap and we'll make some money. But the problem with this is Deutsche Bank's not going to make money. Deutsche Bank, ultimately, they're just slowing down the failure a little bit longer. In other words, they're slowing down the fall of Deutsche Bank to when she finally falls off a cliff. Unless some miracle comes along, and I can't see it coming, Deutsche Bank's just going to continue slipping and sliding until it finally goes. And the question mark is how much longer is actually this going to actually take before Deutsche Bank actually just does the Lehman moment sort of thing. Will actually be Lehman moment times 10. Listen, thank you guys for listening to this market report. Remember to give me a thumbs up. Really appreciate my viewing audience out there, and we'll catch you guys very soon again with the next show. Bye-bye, guys.